Yeah, we are live. We are live. We can start.
So I have to share my screen again, right?
Yes.
Yeah, is it visible?
Yeah, it's visible. I'm making it public. Just a moment. No? Then you
Yes.
can start.
Let me know when I should start. Yeah.
Just a second. Yeah, you can start now.
Hello, dear students. So how do you feel today after completing your costing paper? So you have successfully completed your fourth paper, and basically I can see from the review that I recently heard that the costing paper has gone not very difficult. It has been a little good one as compared to the previous time. So basically, I think you must be a little satisfied and happy with the end of it. But now there comes the most important time, because we are going to now tackle with the subject, which is the fear of most of you. So we now enter into the zone for the preparation, or maybe I can say the final preparation, which we are preparing for our examination ultimately. That is the paper 5, auditing and ethics. Okay. So here I am just to give you a right approach, a right way of starting your preparation, which is the final goal that you're going to attempt in your examination now. I'm sure that you must have. Give me 1 second. I'm very sure that you must have prepared for this subject from the very beginning. But somewhere or the other, because it is a theory subject, the kind of pressure, the kind of stress is always going to be there. And let me tell you the honest thing, that if you have the feeling of anxiety, if you have the feeling of, believing that you are forgetting things, or if you believe you're pressurized, you are really worried for the upcoming examination, then trust me, I don't call all this to be anything negative. I call it to be a positive thing. Because only a student who is prepared or who has studied dedicatedly will go through all these emotions and all the stress. Otherwise, a person who has not studied will be very reluctant and will not have all these kind of things to be thought about. So if you are feeling all of these pressure, all of this anxiety, then trust me, you are in the right framework and you will be able to tackle the paper very, very well. But then what is the reason that I am coming to you today is that when it comes to only 1.5 day preparation, the problem is, how do we start with? How do we study? There are 11 chapters and the time is very limited. What would be the way in which we would be able to cover our syllabus so effectively that we would be prepared for the main examination ultimately? So here is a little bit of framework for you. There is something going wrong. So here is a way of you to understand that when you look at the past papers or when you do some kind of evaluation, you will see that there are some core parts in the subject where maximum marks have been fetched. So basically, if you're looking up for at least 50 plus of the easy go in the examination, I would not say easy go, but then sure questions are going to come from this area, then I can tell you which are the right topics for you to begin with your preparation as of now. I would not call it to be preparation. Obviously, it is revision. So the right way of beginning your revision as of now is that you pick up these topics first, because these are the areas where 100% questions will come in the examination. And trust me, the questions will carry good weightage. And because of which I believe for a proper and adequate coverage, these topics are to be completed. So let me give you an insight of it. First thing, I am extremely confident that on this topic of ethics and acceptance, okay, where you see that there are number of things being tested. SQC1 is there, SA210 is there, SA220, correct? Then you have multiple discussion regarding independence, threats to independence. These all things get connected. There is some glitch. You have to give me some time. There is some problem going on. I'll try connecting a little later. But before that, let me give you an understanding. I think orally you'll be able to find it out, what I'm trying to explain it to you. The basic understanding is, first, the topic ethics and acceptance, which I confidently believe that has a 12 to 15 mark coverage. Because you must have seen in the recent examination, or if you have gone through the MTP also, RTP also, you will see that questions from SQC1, questions from SA220, 210, independence and threats to independence are very commonly being questioned. And this is one of the areas where you will surely get tested, and that is going to be a very good coverage of almost 12 to 15 marks. So if you ask me, I would say that this chapter, I would not say something is important or something is not important here. Rather, the entire topic of ethics and acceptance holds highest weightage in your paper. So this, please do not do selective preparation. See that you cover the entire chapter thoroughly, because from anywhere the question can come. They could ask you regarding threats to independence. Questions could be from 220, 210 and SQC1, because randomly SQC and 220 have become Institute's favorite. So these questions could come. So one pointer is that where I believe very strongly that questions could come from here. Second important topic where the coverage could be minimum 15 marks. Okay. Why 15 marks? Because when you look at the quantum of the topic itself, you'll realize the topic is a compilation of standards. So if you look at the chapter of audit evidence, you will see bulk of the standards are covered here. And all the important standards. Like to give you a very clear insight about which standards I call to be really important is SA 501, SA 550, SA 580, where Institute has been questioning now. We have 505 and two very, very important standards where, take it from me, the questions will appear. One is audit sampling, SA 530, and then is going to be analytical procedure, SA 520. So basically, this chapter includes all the core standards, wherein coverage of these is very, very important for the exam. And because of that, I would say that your sincere practice has to be on this. See that you do a deep revision of these standards. I would repeat again, 501, 520, 530, 505, okay? More importantly, 580. Also remember, from 610 also the questions are coming, but I think if you get a synopsis of that standard where you know what is the framework in which you study it, you'll be able to handle that also. All right? Then, after that, the topic which I would consider to be very relevant and again, very important questions come from there, which is a coverage of almost 5 to 8 marks. Again, is the topic of completion and review. Okay, basically, I told written representation as a part of audit evidence. It comes as a part of completion and review. But yes, in completion and review, you have 560 and 570 being covered. Which two standards I would call it to be, again, extremely very, very important. So from there also questions are tested. So see that will be a third preparation that you take up. Then our favorite, where the first is a lot, that is a difficult one, but I call it to be one of the simplest set of standards, which is the audit report 700 series. I don't believe that you will have a question on framing the drafting the report and all that kind of questions, obviously no. But yes, technicalities on 701 like CAM, but what kind of opinion with respect to modified, unmodified, okay? Then the elements of reporting. These all things could definitely be questioned, but the most highlighting point would be the parts coming from section 143 and the CARO requirement. So CARO also 143 only it comes under, but yes, separate focus should be given on CARO, the 21 clauses. Understand you must have already studied them. But when you revise, you strictly go through all the 21 clauses and you see that the numbering of the clauses is thoroughly understood by you. Because when the question is given, trust me, you will be able to understand, okay, the CARO reporting, what you have to report. But then institute also looks for what? The clause number and the proper precision regarding how you code the clauses. So you have to be very particular that you go through them. And last minute undergoing or maybe overlooking with all of these standards, like actually going through all the clauses is very important, because these are the areas where actually we go on for by-hearting sometimes. So 21 clauses, quick glance at your end in the last minute is very, very important. You should not go wrong in, mismatching the standards or the clauses. So that should not go wrong. And you will have a thorough question coming from here. So see that you make it a point that CARO question, whenever it comes, whatever it is, you should be able to handle it. So that should be the level of 21 clause preparation. Then you have audit of banks, which now I'm going to take you through quickly with all the important areas, so that I want to give you the positive insight that you start your revision with me, so that I also feel satisfied and you have a proper beginning of your preparation with me. So audit of banks, you will have 5 marks to 8 marks compulsory coming in. It could be as a part of MCQ. They could ask you in the form of direct question. There could be calculation of, provision, asset classification, deemed NPAs. So when I'm using all these words, if something is clicking your mind and you believe I have done this somewhere, drawing power, if all of these things, if you're able to click it, then trust me, you are in the game. You are able to, crack the upcoming examination. You'll be in a position to prepare for it. So don't get carried away. Don't get stressed that there is a theory paper coming up, so much to be studied. No, if all of these words which I'm using, you are able to connect with me, okay, in a simpler manner also, then also I would say that yes, you are in the right game. Then one important standard according to me, which I say that every exam the question comes, and this question is something very easily handleable because the chapter coverage is very minimal, that is audit documentation. But the question comes will be very simple, so I think you'll be able to handle. So such kind of topics, do not leave it for the exam. Okay, then apart from that, this is the key area which I've focused on, where I've told you ethics and acceptance, audit evidence, completion review, audit report CARO, audit of banks, audit documentation. These are the core areas where 50 marks scoring, questioning will definitely be there. So if you do these, trust me, in the examination, the 50% of the marks you'll be able to attempt them properly with the understanding that you know it. Okay. So a deep coverage of these topics are very, very important. Apart from that, audit strategy also questions come. Okay, but that is a very, very integrated theory. And I know theory becomes very difficult there. But yes, one quick glance about that also would be relevant, because you should be able to write it correctly. So audit program, advantages, disadvantages, the summary, audit summary, the memorandum that you prepare, audit memorandum, that is important. The retention period of documentation, working paper, which is considered to be, adequate one, form and content, all of these things, it's a big thing, which is only in 2-3 pages it has been covered. So I don't think so it is going to take much of your time to revise it, but that revision will be worth it because you will have a question coming. Then a big fear, 2 topics. Audit of items of financial statements, where so many procedures are there. So ideally at this point in time, I'm very sure you'll not be able to cover all of it. But yes, the best way of preparation would be pick up 2 assets, pick up 2 liabilities, pick income, pick expenditure, get the understanding of how the framework is decided, understand the concept of assertion, understand which assertions have to be tested, how it has to be done. Then somewhere or the other, you'll be able to bring a link. You'll be able to collaborate with what you have studied earlier. You'll be able to correlate. And then some common pointers you'll be able to jot down. And ultimately for the exam, you'll be well prepared to give the answer. I know this is not the way in which you study it. So studying is not the point. My point is, in the last 1.5 days, how are you going to prepare in the most effective manner? So all assets you can't cover, all liabilities you can't cover, all income, all expenses, you are not in the position to cover. But assertions, all you should be able to understand, because MCQs also, they question you on assertion basis. And if a question comes, they'll ask you to pick up a particular assertion to explain it. That is how you verify it. So you should have thorough knowledge about what the assertion means. And then if you pick up 2 from all the 4 slots, from all the captions, I think that will be a solid revision for that chapter. If your time permits, but I think if you have studied it once, then 2-3 pointers revision if you do, or 2-3 caption revision you do, it will be enough. Then the chapter 9, which is there, the special features of audit of different types of entities, where I would say please concentrate on local bodies, concentrate on audit of government, NGO. Okay, so you have questions coming from here, so you could definitely be tested here. So see that these areas do not go wrong from you. So because it's a bulk coverage of hotels, hospitals, clubs, and all that, that all you must have gone through once. And in the exam, trust me, at that point in time, what strikes your brain, that only will work. So you can revise quickly, having a glance just on the day of the examination morning. But when you're revising thoroughly, see that these areas you go through properly. And also cooperative societies, where basically regarding investigation and inquiry by the registrar, the special report of the registrar, the serious irregularities to be reported, these precise concepts you have to go through thoroughly. All right. So according to me, I never believe in selective preparation. But then, yes, we have to understand smart preparation is very important, because there is a limitation on the time. Already what I've told you is too much. But then I'm not telling you to go in detail everything. I'm simply telling you that you require some guidance from where to start with, because so much is there. Somebody has to guide you. So because of that, I strongly believe if I give you an approach, or if I tell you, okay, these areas you can start with a deep preparation and then proceed further, you will be having the confidence of starting it properly. And not only that, I decided that I will also start the revision with you. And that is the reason what I will do is audit of banks as a chapter. Let me do it with you simultaneously. So I'll not be able to cover the entire one for you, because I'm very sure you have the importance of the time to study for yourself altogether. So what I would do is I would quickly pick up that area wherein we believe that there is a maximum chance of questioning. So we know that when it comes to audit of banks, you try to quickly recollect which are the important areas. Till then, I will try to share the screen again so that we'll be able to comfortably discuss this topic. Absolutely no idea why it's not working. Okay, there is some problem. Let me do some other adjustment for the same. But I'm not able to share the screen here. Okay, so just try to recollect what you can from the point of view of audit of banks. And quickly, let us have the discussion regarding. There it is. Just 1 second. Sorry for the inconvenience, but there's some problem. Okay. Okay, I believe the screen is visible to all of you. Okay. So let's have a quick revision of the audit of banks. Okay. Now, because I have some problem with the cursor, I'll be using it directly from here. So now when you look at audit of banks, if you want to quickly recollect, what are the different sectors in the audit of bank that we study? See, first we understand regarding the banking sector in detail regarding what is the, the complexity of transaction, the volume of transaction, how it is different from all the other businesses. So that is a simple background that is there. Then we focus on the types of banks, where we discuss about the commercial banks, regional rural banks, cooperative banks, payment bank, development bank, small banks. So all of these banks, there is some feature or the other associated with it, based on which we differentiate. Like to give a simple understanding, commercial banks are the ones which are the maximum sector, wherein we, actually have acceptance of deposits and lending being the major service that they provide. And also they're providing multiple services to the sector, correct? Regional rural banks are basically operating in the regional areas, that is rural areas, that is to cater the needs of all the local people, all right? Cooperative banks are also like regular banks, but they are working on cooperative principles and they're registered under the Cooperative Societies Act. Payments bank, as we all know, is a new concept altogether, wherein they're allowed to accept deposits up to a certain extent. But at any point in time, they cannot give any loan or cannot issue credit cards. The only thing that they're allowed is they can give debit cards. Development bank is for infrastructural development, and small finance bank, by the name itself, it is for the small people. That is not small people, basically the small sector, the unorganized sector. So basically, when you have the handicraft people or the small farmers and all that, for them, unorganized sector, for them, this bank is operating in their benefit. So that is not a major discussion. So basically, what I will do is, I will focus more on the most important area as of now and help you start the discussion of audit of banks with me, so that once we start, you will be in the flow of continuing it. Okay. So you know that the most important part of audit of banks for everybody's discussion is regarding the RBI's prudential norms. Prudential norms of what? Income recognition, asset classification, and provisioning. Okay. Wherein income recognition, we first study the concept of NPA, correct? Then we have the concept which is very, very interesting, which talks about deemed NPAs. Then once you understand what is NPA, you have to create a provision regarding all the standards, all the assets. And also we study about the classification of assets based on which the provisions will be created. Apart from that, one more important area that we could start with the discussion is regarding the drawing power calculation. So when we take a crash credit facility, the bank overdraft facilities, then there is a limit on the drawing. And this drawing power, how it is calculated, it is based on the primary security which you provide. Some margin will be maintained by the bank. And based on that, some drawing power will be given to you, up to which only drawing will be allowed. And if you withdraw more than that, then we consider it to be out of order or the account becomes irregular. Apart from that, if you look at it, you will see that in this bank topic, you have bank audit approach, which is quite theoretical. Then you'll be having regarding the different reports to be prepared by the bank auditor. So we'll have the main report prepared by the chartered accountant, that is the central statutory auditor, which is going to be as per SA 700. Along with that, you have to prepare a report on the internal financial controls, which comes as a part of section 143, subsection 1, clause I, which is internal financial controls, whether operating effectively or not. After that, we have the LFAR to be prepared, long form audit report, for which we have a timeline that by 30th of June every year, submission has to happen. Then on the treasury operations, the report has to be given. On the SLR compliances, report has to be given. Provision, asset classification, all the RBI prudential norms, on that the report has to be given. Then all the regional rural bank, the deposit credit ratio, if it is adverse, then in that case, reporting has to be done. Then we have the Ghosh and Jilani committee recommendations. On that, the report has to be submitted. So there are multiple reports which have to be prepared. Apart from that, if you look very carefully, you have LFAR, long form audit report. This is like in the regular companies, when you talk about Caro, how additional reporting is required. On the same lines, in case of bank, where Caro is not applicable, then in that case, we have this kind of reporting coming from RBI, which is nothing but they'll give you a list of things to be filled up by the auditor, looking into all the banking operations, and you're required to fill the checklist. So this is considered to be what? The LFAR, long form audit report, which compulsory the auditor has to submit by 30th of June every year. Also, they could give their own summary about all the discrepancies and inadequacies that they have found anywhere. They can prepare a summary and give. However, it is not a hard and fast rule, but summary can be made. Then after that, we have the discussion regarding who can become the auditor of the bank, which is any person who's qualified to be the auditor of the company. Then we talk about who appoints. Then there we have a discussion regarding in case of nationalized banks, they're appointed by the board, that is the managing board. And in case of banking company, they are appointed by the members in the AGM. In either of the cases, you require the permission coming from RBI. In case of RRBs, the appointment happens by whom? It is by central government. When you talk about remuneration, again, the one important point of discussion is banking operations. In India, we don't have the bank operations happening at the corporate offices. They happen through the branches. So you'll see every bank is having multiple branches and all the operations happen only through the branches. You don't have to go to the main offices. Okay, we operate through branches. One important question for the examination could be the regulatory framework. And regulatory framework simply means all the laws which are governing the banking sector. So laws governing the banking sector, these are the laws that you have to remember also. So we have the Banking Regulation Act. Then if it is a bank, the regulatory body is there, Reserve Bank of India. So that act will be applicable. For State Bank, you have a complete separate act called as the State Bank of India Act 1955. For RRBs, you have a separate act 1979. If most of the banks are companies, so Companies Act 2013 will be applicable. Banking system is completely depending on information technology. So the IT Act 2000 will be applicable. Prevention of money laundering, you can understand. Okay, so anything that is happening, evading the banking channels, for that also you have to check it. So Prevention of Money Laundering Act will be applicable. SARFAESI Act, that is Securitization and Debt Reconstruction and Enforcement of Securities Act 2002, that will be applicable. Credit Information Companies Regulations Act. Okay, so basically credit rating to be analyzed, that act. And then for the Payments Bank, which is the latest one come up by the RBI, for which we have the Payment and Settlement System Act. So these are all the regulatory frameworks which are going to be applicable on the banking sector. So these all compliances are very important. So you can have a quick glance on all of them. And based on that, you'll be able to understand that these all are very, very important. Okay, then. After that, peculiarities is quite simple. Large volume of transaction, wide geographical location, huge volume of transactions are there, extensive use of technology, and vigilance by RBI is very strict. Okay, types of audit report, I already gave you a detail of it where I mentioned all of these reports. So you have to submit all of that. Bank audit approach is like a regular audit. Ultimately, it is a bank audit. So you can look at it, you have to draw a plan, then understand the control environment, and then you have a discussion with the engagement team members. Then ultimately, you will strategize, you will plan, you will perform the procedures, you will obtain the evidences. Audit remains standardized. So here, when you draw the audit plan, you need to understand the entity entirely. So nature of operation, level of operation, complexity of the transaction, volume of transaction, indicators of fraud, any previous findings are there. All of that you take into account. Then you look at the control environment where you take all the components of control, correct? And ultimately, you discuss all of this with the engagement team members. And once you discuss, you get all the insights of where the risky areas would be. Based on that, you'll jot down a plan, strategize it, and start doing the audit. So that is called bank audit approach. Not a difficult point at all. It's quite simple to understand. When you evaluate the control, you have to understand what is the control, who, when, what, how, everything has, how it is implemented. All these questions have to be raised. Correct? Then. Now comes the point which I wanted to discuss with you very clearly, which I believe it to be very important for the examination. That is the income recognition policy. Now in banks, understand we have the classification of the assets as NPA. So advances when they are irregular. When the person is not, or the borrower is not repaying back the money, then in that case, after some point in time, they get classified as non-performing assets. So when you talk about a regular asset, a standard asset, and when you talk about a non-performing asset, the income recognition criteria for both will undergo a change. Because when you talk about NPAs, the asset income recognition will happen only on cash basis. That is only when they're actually received. And for the NPAs, we are definitely going to bring it on accrual basis. On cash basis. And for regular, we bring it on accrual basis. So simple line, one-liner is NPA will be always on cash basis. Form and content, very simple. You have Banking Regulation Act 1949, under which we have the Schedule 3. And under Schedule 3, they have given you the format for a balance sheet and profit and loss. So it has to be prepared based on that. And obviously, it's a company. So the compliance with Section 133 of the Companies Act 2013 with respect to the standards, accounting standards, is very, very important. Then audit of accounts, obviously, all of these have to be done. Appointment, I told you who does it. Remuneration also will be fixed by RBI in consultation with central government. Or we can say that it happens in case of banking company as per Section 142. Powers of auditor, exactly the same as that of company auditor. Okay, then audit report will remain as it is. Then when you talk about format of the report, understand here reporting format will be like SA 700. Plus you have all the additional reporting. Apart from that, you have to remember, very important, we do Section 143 subsection 1, 2, 3, all those inquiries and all. These also will hold good here. So basically, all of that reporting has to happen correctly on principal assertions, inquiries, all of that. Very important, CARO will not be applicable. Okay, that we have to remember. Long form audit report, I already gave the explanation that the submission date is going to be 30th of June every year. It is given by RBI, which is mandatory to be filled up by the auditors who are performing the bank audit. It is really applicable to the central statutory auditor, plus even the branch auditor. He also has to look into this matter and fill up the LFAR for the respective branch. Okay, then. Reporting to RBI whenever there is suspicion regarding a fraud, whether you are internal auditor, whether you're external auditor. If there is a suspicion, if there is a doubt, or you have actually found out the fraud, in all of these ways, you have to inform the regulatory body, that is RBI. You have to do all the duties as required by SA 240. That is, it's your responsibility for reporting the fraud if identified during the course of your audit. Obviously, it's not a primary duty to identify the frauds, but if we come across, then it is a duty to report the same. Correct? Report the same to whom? TCWG, that is going to be chief executives of the bank, managing directors. But apart from that, you also have to inform to the regulatory body, that is RBI. Correct? Then. Conducting of the audit is very, very simple. Initial consideration is regarding, you have to inform about your indebtedness. That means if you have taken a loan from the bank and all. If you are already doing any internal assignment with that bank, then you cannot take up the audit of that bank. Planning will be done as per SA 300. Obviously, by taking into account all the preliminary activities like acceptance and continuation of client relationship, look into independence criteria and then accept it. Compulsory, you have to communicate with the previous auditor, because as per professional ethics, the clause 8 of the part 1 of first schedule clearly says that you cannot accept an audit engagement without communicating first to the previous auditor. Terms of audit engagement have to be discussed. That is 210 has to be taken into account. Initial engagement, if it is, then 510 also comes into picture. So you have to do it based on that. Then engagement risk, whether independence is getting affected or not. All of that we have to check. If there is a threat to independence, we cannot take up the engagement. That is the engagement risk. Then we have to develop the engagement team that is going to be depending upon the size and the complexity of the transactions of the bank. And ultimately, we begin the audit by understanding the bank and its environment. That is nothing but risk assessment as per SA 315. So these points are quite simple. Okay. So we'll not spend much time here because they're purely theoretical, and I think you'll be able to manage it. Here, exactly what we study in risk assessment topic regarding, we have to understand the control environment. Then we have to understand the entity's RAP. Then we look into the information system. Then we look into control activities. Then we go for monitoring, process checking. All of that is rediscussed here. Okay. So the components of internal control, again, it has been taken into account. Okay. Establishing overall strategy, audit plan, and then audit plan memorandum. Again, consider the materiality, check for going concern assumption. Fraud, we have already discussed that what duty you have. Then you identify the risk and then respond to the assessed risk. Stress testing is nothing but the robustness of the bank, whether the software is the software are critical enough to identify if there is a problem. Okay, so they are mission critical softwares to identify if there is a system which is robust to handle all situation. Okay, which is unforeseen. If anything happens, a risky element, is the system readily prepared for this kind of stress handling. So that's called stress testing. Basel III framework is the Basel III Accord. Basically, here only comes the CRR, capital adequacy ratio. Okay. So all of that is what I told you. But then my focus for you as a part of revision was regarding the discussion of these advances in detail. Okay. So we will spend a considerable amount of time because here I believe this is the area where it is very important for the exam. And you should focus a lot when it comes to questions from here. So when you talk about advances, you have two types of advances, funded loans and non-funded loans. Funded is where actually the money flow is going to happen. So where money is going to get transferred. For example, term loan is there, cash credit is there, bank overdraft is there. All of these where money is actually flowing from the bank to the client or the customer. Non-funded is where money movement doesn't happen, but the bank is providing a security kind of thing, like bank guarantee, where directly the funding is not happening, but indirectly they do it. So that is considered to be non-funded facility. Okay. Then disclosure requirements are quite simple. Disclosure you have to compulsory give in 3 areas. First, nature-wise. Nature means you have to give what kind of it is. So you give from short to the longest. So bill purchase and discounted, short term, cash credit, bank overdraft, and then the longest one, that is term loans. After that, you also give security-wise. So we know secured, unsecured. So secured would be based on tangible asset. Secured could be on government guarantees. And then you have the bad ones, which are unsecured. Not bad one, risky one. Location-wise, advances could be in India, advances could be outside. In India, we first categorize them into priority sector, public sector, then to the other banks, and then others. Outside India, due from the bank, due from others, and then bills purchased and discounted, syndicated loans and others. Syndicated or collaborated loans. So this, I would recommend that you try to remember it. Nature-wise is quite simple, short to long. Security-wise also secured, unsecured. Location-wise in India and outside. In India means you have to divide by sector-wise. Priority, public, bank, others. Outside will be from, due from bank, due from others. Then if you look at bills purchased and discounted, syndicated loans and others. Okay, security creation, we know the primary security and there is going to be collateral. Collateral is going to be the additional security that you give. Security creation, we have multiple ways to understand. We have mortgage, pledge, hypothecation, lien assignment. Mortgage is very simply hand over the title deeds, okay, of immovable property. We call it to be what? Mortgage. Basically, it happens for immovable property. Pledge, hypothecation, both happen for movable properties. In pledge, physical possession will go to the banker. For example, gold and all. Hypothecation, physical possession is retained with the owner. But yes, control is exercised by the bank until the time the loan has been repaid. Lien is exercising the lien so that if the loan is not repaid, you can sell off the goods and all. Assignment is where the recovery right is being transferred to somebody else. That is considered to be assignment. So basically, these are all the ways through which security will be created. All right. So when you look at assignment, like LIC policies and all, assignment happens there. So if you don't pay, the amount will go to the bank. So you assign the amount to whom? Banker. So that is considered to be assignment. Okay. So these are regarding the different types in which you can create a security. Also, there is a point of set off. Set off is nothing but a credit balance with the bank and a debit balance with the bank. Okay. So what happens is you have a deposit also with the bank and you have taken loan also. So what the banker will have a security that if you don't pay the loan, they will set this off from the deposit already available. So if you have an FD, then what they will do is this FD they'll use to repay the loan amount as well as the interest. So this also acts like a security to the bank. Okay. So that is called a set off. Now we come to the classification of assets. Now listen to me very carefully. Classification of assets means you're going to categorize the assets to understand whether it is an NPA or not. So we are going to first understand what is NPA. NPA is basically very simple, an asset which has stopped generating income to the bank. Meaning is you give loans, advances. From the advances, income has to be generated in the form of interest. Now, when the person is not repaying back the amount, the installment is not repaid, then in that case, you are not getting any income from this kind of advance of yours, this asset of yours. So because of that, that particular asset, we start terming it to be NPA. But instantly, you cannot call it to be NPA. There is going to be a transition phase, a phase-wise way in which classification happens. So first, when they are regular, you call them to be good assets, standard. Then what happens is there starts happening to be some problem, maybe 1 week later, 2 weeks later from the overdue date, or 1 month overdue, and they're not paying. All of a sudden, we can't classify them to NPA. For NPA, there's a criteria. So you keep them in the special mention account, SMA. SMA basically is the categorization where it gives a hint to the bank, these could slip into NPA. Be very careful. So the banker will proactively take remedial measures wherein they can stop this particular asset to fall into what? NPA. All right. Then after that, after you cross the stage of SMAs, then comes the point where you're slipping into what? NPAs. And once you slip into NPA, then asset classification will change. Provisioning norm also will undergo a change. So basically, there is going to be a lot of change that will come up. All right. So now, when you talk about NPA, you have to understand the categorization. In NPA, we look into bills purchased discounted separately. We will look into term loans separately. And then we look into the cash credit and overdraft facility separately. Bills purchased discounted and the term loans. For both of them, the criteria to be classified them as NPAs, bank will give a due date of repayment. On the due date, you are not paying. And after that, also 90 days you have not paid. So your amount has been outstanding for more than 90 days. It is overdue. Then that bills purchase discounted and term loan, which has become more than 90 days overdue, will now be termed as what? A non-performing asset. And based on that, the provisioning classification will undergo a change. On the contrary, if it is suppose a cash credit or a bank overdraft facility, then we will not look into 90 days criteria. We will look into out of order. What is the meaning of out of order? Out of order simply says that we know that when you take a overdraft facility, there is a drawing power given to you, a sanctioning limit. And at any point in time, you can't cross it. So what is happening? This particular customer is constantly keeping the balance overdrawn than the limit actually allowed to him. So either continuously you're keeping it overloaded, that is overdrawn, or you have tried to credit, you have tried to pay, but then your payment is not sufficient absolutely to cover even the interest that is outstanding. That is as on 31st of March. Okay. It has been almost more than 90 days, wherein you have not bought any credit. That means you have only withdrawn, not paid anything. Or you paid, but then that payment is not even covering the interest which is due on that particular overdraft. So what is happening? Two things. One, continuously overdrawn. Or on 31st March, you see that 90 days are over and absolutely no credits. There are only been withdrawals. Or as on 31st March, in the last 90 days, there have been credits. We agree. But the credits are not sufficient to cover what? Even the interest. Then in all these cases, we call it to be out of order. And once it is out of order, we term it to be what? NPA, non-performing asset. Is the point clear? We can look at this language here. It's easiest to generate income for the bank. Okay, that is the common criteria. Second, if it is talking about a term loan, they're telling it is the interest or the installment is overdue for more than 90 days. If you talk about overdraft and cash credit, they're using the word out of order. And in case of bills purchased and discounted, they're again giving the timeline of 90 days. Correct? Then now look at the overdue. Obviously, the due date will be fixed by the bank. So whatever bank says is the due date, 90 days if you cross, it becomes overdue by 90 days. Term it to be NPA if it is term loan or bills purchased and discounted. Out of order, three criteria. First is when you call it to be out of order, when you're excessively withdrawing. Continuously, the withdrawal is more than the drawing power of the sanctioning limit. Or for the last 90 days, as of 31st March, you will see that there has been no credits absolutely. Or there are credits, but the credits are not even able to cover your interest. Okay, that is the idea. Okay, so that is considered to be out of order. Once it is out of order, we call it to be what? It is NPA. All right. Then, when you are a good asset, all of a sudden we are not putting you into NPA. That 90 days timeline is there. So because of that, what they're saying, we are going to categorize it to be special mention accounts where irregularity starts. 1 week overdue, 2 weeks overdue, 4 weeks overdue, 6 weeks overdue. All of a sudden can't go to NPA. But then bank has to understand these are going wrong. There is a chance of it to slip into NPA. So we have to take remedial actions. So what they do, they put it in a special mention account where the concentration of the bank is more and they'll try to apply remedial measures for letting them not slip into NPA. So that is SMAO 1 and 2, where asset starts showing the stress signals, 1 week, 2 week. Then in that case, you could classify as SMAO, special mention account, SMA. Second, if it is crossing 30 days, that is 31 days to 60 days, it becomes 2, SMA 2. 61 to 90 will become what? SMA 2. SMA 2 is the worst because after that, what happens is if you're going to cross that limit, then you'll be slipping into NPA. So basically, stress signals, O, 31 to 61, 61 to 90 is going to be what? 2. So students who have a confusion whether 90 days has to be taken or not taken for NPA calculation, remember, it should be overdue for more than 90 days. Up to 90 days, you come under SMA 2. That is the idea. All right. Then, as I told you, now the important discussion is going to be classification as per the prudential norms. In prudential norms, you are going to have discussion with respect to asset classification. Then based on the classification, we create the provisioning. I would recommend if you have studied it, try to recollect it instead of, just looking at the screen. So what is the classification of the asset? Standard assets, substandard assets, doubtful assets, and loss assets. Correct? Standard assets are the assets which are actually good. So they are carrying a regular risk, normal risk. Understand every debtor carries a risk. So you cannot say no risk absolutely, so no provision will not be created. We believe 100% debtors are going to pay. That concept never happens. So standard asset is, yes, they are paying regularly, but even then tomorrow they might not. So normal risk they carry. So we call them to be what? Standard asset. Substandard asset are those which have become NPA, but they are in the NPA category only for a period of less than 12 months. So 12 months or less. So it is newly got NPA recognition. So only 1 year is over, or within 1 year only, okay, the year end happening and the classification has to happen, then you call it to be what? Substandard asset. What is doubtful asset? NPA for 1 year you're keeping where? In substandard. Now, if it is remaining NPA even after 1 year, then in that case, it is going to categorize as what? Doubtful. That means you can say that if you continue to remain in substandard category for more than 12 months, then automatically you'll shift to the next category that is going to be doubtful. And then comes the loss asset. Loss asset, there's no criteria. Either by RBI inspection or external auditors or the internal auditors give an understanding that this particular advance is going to become an NPA or it is not going to recover anything, then in that case, we call it to be what? It is going to be a loss asset. So this is not a criteria of 90 days or so many days it has to be and all, nothing. If it is identified that it cannot generate income, reported by RBI inspection or the auditors and all, then in that case, that asset will become strictly what? Loss asset, correct? So standard asset which did not disclose any problem, it carries the normal risk. Substandard, it is NPA, but for a period of either 12 months or less than 12 months. If you have continued to be in substandard for more than 12 months, you automatically shift to doubtful. And then if by inspections and all you have been called to be or identified as a loss asset, then they term you to be what? Loss asset. So provisioning, obviously you can understand. Standard asset, very less provision required because normal risk. So 0.4% is what we keep. Substandards and all will be again very simple. It is going to be 15%. But doubtful, understand, doubtful assets we categorize into two. Secured and unsecured. In case of unsecured, understand doubtful plus unsecured. Don't you think risk is very high? So basically we write off. So it is going to be 100%. But secured, what we do is, okay, depending upon the outstanding years, we are going to give the classification from 25% to 100%. So you look at that secured portion. If it is overdue for up to, that is, it's remained doubtful up to 1 year, then 25%. 1 to 3 years, we keep it 40%. And more than 3, obviously, it is not going to generate only now, understand. So it is how much? 100%. So you have 25, 40, and 100. Understand calculation from when it became doubtful. So if you have remained in the doubtful category for 1 year, 25%. 1 to 3, 40%. More than 3, 100%. Clear? Then. Loss asset, you don't have to even think about. When doubtful, unsecured only we are providing for 100%. Loss is totally gone. So it is going to be how much? 100% provisioning. Okay, so in the exam, these all numbers and all you have to remember. The categorization you have to remember, and based on that provisioning you have to create. So 0.4% for standard. Remember, it's not 40, it is 0.40%. Okay, looks very simple what I'm telling, or you'll feel silly. But trust me, these kind of blunders we do in the exam in that kind of, quickness or in that fear or in that stress, we do these kind of mistake. So 0.40%. Substandard is 15%. Doubtful, unsecured, secured. Based on the secured, we classify in the timeline. Up to 1 year, 1 to 3, more than 3. And then finally, we have the last one, loss asset. Correct? Now, the part which I take up last now, okay, basically this plus one more area regarding drawing power, because I believe it can come in the exam. So these two, I would strongly recommend that you go through thoroughly because case study questions are framed in this area. And according to me, a categorization for bank is this part, which are assets deemed to be NPA. What we studied now is where categorization criteria is given. And they're telling this happens NPA, that happens NPA. Here, you're not able to fulfill the criteria. So based on the criteria, you're not going to be NPA. You're not NPA. But even then, something is there where though you're not fulfilling that criteria, you will still be classified as what? NPA. So that we call it to be what? Deemed NPA. Now, the very important point for you to know is that first thing, the NPA classification will happen purely on the record of recovery. If money is received, that only is taken into account. All the other parameters will not be taken into account. Meaning is very simple. Meaning is, if you have solid net worth, if you are super rich, you have huge property, but you did not pay the banker the money, then in that case, the banker is not going to give importance to your, net worth, the estate and all the property that you have. All that will not matter. Your goodwill and all, nothing will matter. The only thing what will matter to the bank is, did the money come or no? Paisa aaya ya nahi aaya? So basically, NPA classification is only on the record of recovery by the bank. No other parameter will have any kind of stake in it. So here you can see net worth of the borrower, guarantor, nothing will matter. The only thing that will matter is what? The record of recovery. Will the money come or no? Okay, then. Understand, very important point for the exam. When you do asset classification, always remember, if suppose there is a customer of the bank which has taken multiple facilities from the bank, credit card facility, term loan, cash credit, all of that. If suppose by any reason, one of them has become NPA, okay? Then in that case, you cannot tell. For example, suppose credit card has become overdue, it has crossed the limit, and based on that, credit card became NPA now. So now understand, if credit card facility has become NPA, then in that case, these two facilities given to you will automatically also become what? NPA. So we are not going to classify facility wise. Only credit card becoming NPA, term loan, cash credit will continue to be normal. No. You are not going to categorize it facility wise. You will categorize it borrower wise. So Mr. A, 3 facilities he has taken. One facility became NPA. Mr. A's all facilities will automatically be termed to be what? NPA. So the term loan, the cash credit card all together of Mr. A will now become what? NPA. So it is going to be what? Borrower wise. The entire borrower will become NPA. Now, account regularized near the balance sheet date. What is the meaning of this? Point is, sometimes, the bank will, give extra amount going beyond the powers and all. The manager might sometimes misuse the powers and all and give you loans or sanctions more than what is required. And then what happens is, as and when the year end comes very closer, you will see that the amount is not being paid by the person, obviously because he does not have the credibility. So he's not paying. But now the bank manager will be tensed. Correct? So what happens is, some way or the other, they'll persuade the customer and say, look, if you don't pay 31st of March, it will look as NPA, scrutiny will happen and things will go complicated. So only because the asset should not slip into NPA, what they'll start doing, near to the year end, they will start regularizing the account. That means start putting credits to the account, start depositing money in the bank. Okay? Understand this kind of situation if you see, where you'll see for a long period of time, money has not come to the bank. All of a sudden in the month of March, at the end, lot of, credits have been come. Meaning is, something is going wrong. So what the auditor has to do is, he has to see that last time when the entries came into the bank, and immediately in the month of April, initial days, is reversal happening. And if he comes across this, where they have deposited, and immediately after the year starts, they are withdrawing also, then you should understand that these entries which happened at the year end were only to regularize the account. And when such kind of thing is found out by the bank, by the auditor, then you should understand that this particular asset, though by the calculation given by prudential norms, happens to be a non-NPA, it is deemed to be an NPA because it was only regularized at the year end, at the balance sheet date. But actually, it has a problem. This how you will understand. You have to check the transactions in the first week of April. Understand if reversal has not happened and all that, it could be genuine transaction. Sometime maybe the person is doing very bad business during the year, but maybe in February, March, he started generating money. So as a good person, he started giving money back to the bank. So that would be a genuine thing also. So you have to look into the April transactions properly to understand reversal should not happen. If reversal happen, it is this, regularizing at the year end. If reversal is not happening, it is an objective decision of the auditor that it is not to be slipped into NPA. It could be good. So that is account regularized at the year end. Government guaranteed advances, very important for the exam. Understand, government guaranteed advances, we have 2 governments in our country, central and state. Only if the central government gives a guarantee, don't convert that asset into NPA unless the guarantee is revoked. So the asset, amount is overdrawn for more than, it is outstanding or overdue for more than 90 days. Even then, you cannot call it to be NPA if central government has given the guarantee. But if state government has given the guarantee, 90 days over, it will become NPA. One very important thing for the examination, remember it for the case study discussion, that if suppose an asset has been classified as NPA, okay, that will affect only the asset classification. Income recognition will not get affected. What is the meaning of this? Asset classification, you keep it standard because central government has guaranteed. But income recognition will happen only on cash basis. That means for income recognition purpose, you will see only the receipt. Then only you'll record. Otherwise, don't record it. So this particular government guaranteed thing is only for classification of asset and not for income recognition. Income recognition will happen only on cash basis. But when you talk about government guaranteed advances, if central government backed up guarantee is there, then in that case, you keep it to be a standard one until he revokes the guarantee, central government. State government guarantee, we don't give weightage. Even if that guarantee is there, once it is overdrawn for more than 90 days, then in that case, it will automatically slip into NPA. Okay? Remember, it's only classification, not for income recognition. Income recognition will happen only on cash basis. Advances under consortium is where multiple banks come together to give you loan. So when loan is given by multiple banks, one of the banks will act as a lead bank and all the other banks will be the fellow banks. Okay, so basically they're consortium banks. So the lead bank only will take into initiative of handling everything, having a conversation, all the discussions that the business is having will have with the lead bank. And actually the process will be that the amount also will be paid to whom? Lead bank. And then the lead bank will transfer its shares to all the other banks. Okay. Usually all these banks in the consortium will have arrangements made to properly, get amounts distributed, for proper share calculated, on time receipt of money, everything will be there. But the point is, understand if there are three banks altogether, one of which is the lead bank, two others are the other banks. NPA classification will be on record of recovery. I told you in the beginning. So if suppose the lead bank has received the money, so in the lead bank's books, it is not going to be NPA. But if the lead bank has not transferred the share to the other banks, has forgotten to transfer or they have delayed in transferring, and in the other banks, it has been outstanding or overdue for more than 90 days, then in the other banks, the record of recovery is not there. So in those banks, this particular thing will be reported as what? NPA only. Okay. So the idea is very, very simple. Understand, lead bank has to part away with the funds. If they don't part away, then the other banks will not have the record of recovery. So it could be a scenario where in the lead bank, it is a good asset, but in the other banks, it is a NPA. Because purely NPA is based on record of recovery of that bank. So banks make a proper arrangement that they receive it on time. Okay, they are proper arrangements done. Then erosion in the value of security. So what happens is whatever security you have given to the bank as a primary security and all, if that is eroded in the value, that means the value has come down. Sometimes fraudulent aspect also will happen. Maybe the person has wrongly given a security, giving a fake value of it. The value will be actually 10 crores, but they're showing it to be 100 crore. Or maybe hardly 1 lakh, but you're showing it to be 25 lakhs, 30 lakhs and all that. So fraudulent aspect also could be there, or genuinely due to some reason, like master plan of the government and all, but acquisition has happened, the value has come down, or some other projects of the government, the value has come down and all. So there could be anything for which erosion of value can happen. If suppose the property that you have given or the security that you have given is having erosion of value of more than 50%. So 100 crore is now giving the value of only less than 50 crores. Then in that case, you straight away consider it to be what? A doubtful asset. And based on that, you create a provision. On the contrary, if the value of the asset is getting eroded to more than 90%, that is only 10% value is becoming recoverable. Then in that case, it is considered to be what? A loss asset. Okay. Obviously, if the party is exchanging the assets and all the things will be different, but here erosion we are looking into for deemed NPAs. So 50% erosion, doubtful asset. 90% erosion is happening, only 10% value realizable. Then in that case, we call it to be a loss asset. Advances again terms, National Savings Certificate, Kisan Vikas Patra and all that, they are not a problem because they are like a deposits with the bank. So if it has adequate margin available, then banker will not classify them to be NPAs. Okay. Or if the margin is not available, then deemed NPA they will be. Agricultural advances, when you're restructuring them, giving them extension of timeline, okay, or having fresh loans in place of the old ones. So natural calamities will affect them. Then in that case, you are not allowed to call them to be deemed NPAs. They'll not become NPAs. Okay. The NPA will happen when the fresh loan is given and that also is remaining overdue and all, then this criteria will come, otherwise no. Okay, do not treat them to be NPA. They'll be considered to be current dues if you're restructuring it because of natural calamities and all. Advances to staff. Staff actually gets interest-bearing advances for housing and all that. So usually the employer will make an understanding with them that you first pay the principal, then start the interest. So tell me, when it is not due only, then how is the concept of overdue? So basically in the first quarter, that first 90 days, when they don't pay for the interest, you can't call it to be NPA. All right? Because interest they'll start paying only when it is outstanding, no? And they're telling first principal recovery and then interest. So when interest due date comes, from that 90 days, if they're not paying, then only you classify it to be NPA, otherwise no. That idea you have to remember. That is advances to staff. This could come in the examination, agricultural advances. We categorize as short duration crop and long duration crop. So short duration crop, if the amount is overdue for 2 crop seasons, and long duration crop, if you have taken a loan for it, then the amount will be overdue for 1 crop season. Crop season is basically, more than 1 year is the long duration crop, less than 1 year is short duration crop. Okay. So 2 crop seasons for short duration, 1 crop season overdue for long crop seasons. Okay, long duration crops. All right. Yes. So that was one of the key areas which I wanted to do with you so that you get you must have already done it, but a quick recap on these matters will help you to get started, or kickstart will be very positive. So you'll be able to recollect all this. And these are very obvious questions in the examination. So you'll get an insight of it. Then there is one important discussion, one more which I'll take up, that is going to be computation of drawing power. Drawing power and sanctioning limit are two things which you have to understand. Sanction is the maximum limit given to you. All the facilities given to you can never cross the sanctioning limit. That is the maximum exposure given to you by the bank. And drawing power is basically considered with all the cash credit and the bank overdraft facilities. So basically, whenever a businessman takes a loan and all, then the banker will calculate the drawing power for him. So this drawing power is nothing but the primary security that you give, the stock, the debtors, etc. On them, some margin will be maintained by the bank. And based on that, a drawing power will be sanctioned to you. So whatever amount comes, based on that, that much only will be the limitation of your withdrawal. Okay, and that much only you can withdraw. So basically what happens is, after every quarter or in the quarter or every month wise, you have to submit the stock statements to whom? The bank. And it will undergo a revision. So drawing power is not going to be calculated permanent. So once you calculate, it's not going to be permanently that much allowed. Because you know they are floating assets. So the stock statements will undergo a change. The current asset statements will undergo a change. Okay, debtors, stock and all that. So basically, they will ask you 1 month, 2 month, 3 month stock statements, the latest stock statements, and you have to keep submitting to the bank. And when you submit, the banker will recalculate it. How? By taking your stock, your debtors, whatever are the, the policies of the bank. Every bank will have their own policy. Some will give you based on stock. Some will give you based on stock and debtors also. Margin also will be decided by the bank. Usually, you will see on the stock 25% margin. On the debtors, you'll see 40% margin. Okay, so that much they'll cut, and the remaining money will be allowed to you as a drawing power. So obviously, drawing power will constantly go on revising as and when you submit the stock statements. Stock statements should be given monthly. However, when the companies are very huge, businesses are very huge, preparing stock statement every time and submitting to the bank every time is going to be difficult. So because of that, they'll allow them 3 month stock statement. Quarterly stock statements will be allowed. However, if it is 3 months old, then in that case, we'll term your account to be irregular. All right. So that is the idea about drawing power, which you have to remember. I would recommend that there is one question in the institute study material regarding the calculation of drawing power, where they have told you that which all things you minus from the stock, basically unpaid stock, the letter of credits, unpaid suppliers, creditors, bills payable, all of that you minus. From debtors also, you have some ineligible debtors, that also you minus. And then you come to a figure. So if you do that one problem, I think you'll be able to handle any problem in the exam. That is the way in which presentation has been given. So just quickly go through it. So sanction limit versus drawing power, the maximum limit is sanction limit. And drawing limit could be as par with sanction or below that thing. Okay, then I told you about stock statements have to be submitted. See, look at that. Auditor's concern will be, you'll see stock statement, quarterly returns, and other statements submitted by the borrower to the bank are scrutinized. And we have to see that whatever has been submitted, okay, should be correct. Monthly stock statements have to be given. And you have to see that they're telling outstanding, okay, for more than 3 months old stock statements will be considered to be irregular. So drawing power cannot be calculated for older ones. Then stock audit also will become mandatory. So anybody who gets the exposure of more than 5 crore funded advance, then in that case, stock audit has to be conducted, and the stock audit report also has to be submitted to the bank. All right. So I think as of now, to begin with your, learning or begin with your revision, this much from my end would be sufficient. I've tried to capture the maximum of the topic with you so that you begin very positively. I hope this session has really helped you. But apart from that, what I told you in the beginning regarding the topics that you take in line and cover it, I would strongly recommend that the ones which I mentioned in the beginning, okay, because of the some problem or glitch with the system, I could not connect the system and show you all that in the screen. But I have orally tried to communicate. If you have taken the note of it, I think it's good. Otherwise, you can just have it a look again. But yes, those which I told you in the beginning, the first 6, see that you please do a deep revision. I guarantee 50 plus marks you'll be able to attempt very easily in the examination. Okay, you will be very thankful later on. So I would sincerely recommend that you do it. Okay, some places where you believe now you cannot study the theory and all, then you must be having the compiler or the question bank. Quickly go through the questions, because nowadays questions also have the capacity of covering the entire topic and in an interesting manner. So if you feel, okay, I'm not able to concentrate on audit strategy, now too much theory, I've taken it already, look at the question bank of audit strategy, look at the questions and answer the questions. The entire topic will be covered in the questions. The first topic, nature, objective, and scope, I always believe first chapter of every subject, students will always be perfect with. I don't know how the psychology works, but it works. So I think nature, objective, and scope of audit regarding inherent limitations of the auditor or the audit, or maybe the qualities of the auditor, all the assurance engagements, their elements, assurance, non-assurance engagements. Okay, all of this, I don't think so you'll now have a problem. You must be quite aware of it. Okay, so one quick glance of that would be sufficient. And though it is a theory paper, trust me, the papers on audit usually doesn't come so complicated and so heavy. This I'm telling you because you should be very positive headed. You should not be, in that stress and tension. In the beginning, I told you stress tension is good. Okay. But because that's a sign that you're preparing and you're studying. Because if you're not having tension, that means you have not done nothing. So if you have the kind of fear and all, it's a good sign. But don't get carried away with it. Don't get exhausted with it. Understand 2 more papers and the game is over. You have survived all 4. And I positively hope that you must have written them well. 2 more to go. So let's keep your energy level intact. Let the confidence be good. Let the motivation be strong. Why motivation? 2 more papers and things are set. All right. So keep your energy level updated. Work day in, day out for the coming 4 days now. And things will be all set. Okay. All the very best. I hope this helped you. And if you require anything from my end, please feel free to approach me. Thank you.